Hi everyone, it's Jack back with another video. Today I'm going to be talking about Teladoc Health. Really interesting company, one that's going to have left a sour taste in a lot of people's mouths. Big benefactor of the pandemic. From 2020 to February 2021, it was up ridiculous amounts. Now since then, 74% down at where it sits today, giving back all of its pandemic gains and is roughly where it was 2 years ago, which is absolutely crazy. In that time, the company has massively increased its revenue. The company has acquired Livongo and BetterHelp in this time. The Livongo deal in particular was absolutely massive, about $18 billion, which is 50% more than Teladoc's market cap today, for around $12 billion. This is a company that's been absolutely beat up, but if you held over the last page, you got nice returns, 235% gain to the current day stock price of $75. There's been a bit of news recently in the stock, and I wanted to talk about whether I think it's a buy right now or whether I think it's a sell or a hold potentially. So briefly talking about what Teladoc is, it's very, very simple. It offers telehealth and healthcare solutions. It wants virtual patient visits with doctors essentially. Purchase of Livongo strengthened their offer in chronic care. This continues to grow. So this is the type of things where dealing with people who are diabetic and things like that. The acquisition of BetterHelp allowed them to better approach telemedicine with a mental health priority. Both are doing fairly well. The Livongo acquisition, obviously a bit of a mess because of the sheer value of that deal at $18 billion. Teladoc is really the market leader in telemedicine and is kind of the verb for it. It's what we all know it as. There are, of course, competitors. Doximity does a similar thing, and there are a few other competitors along the way, admittedly smaller players, Hims and Hers being one of them. The big news in Teladoc stock, and really the biggest news that I've seen for Teladoc stock in a while, is that it's partnering with Amazon to launch Teladoc on Alexa. This is absolutely huge in my opinion. Telehealth is sure to play a big factor in the future of doctor-patient interactions. This is why Kathy Wood has such a high investment in Teladoc. It's one of the largest positions. The ease of simply saying, Alexa, I want to talk to a doctor, and be connected to a call centre is an absolutely fantastic prospect for patients, really big value proposition, and could bring in tons and tons of business to Teladoc, if even just increasing the awareness of this product and non-member visits. This could be huge. I'm not thinking this is going to be accretive to revenue right away, but I think this is kind of the future, is using these Home Assistants, Google Nest, Amazon Alexa, blah, 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 to be able to ring a doctor for non-emergency things. I think this is definitely a move in the right direction. I'm glad Teladoc's been one of the first movers on this. This is the first deal of this kind, I think. So I initially launch via audio with video visits coming soon. Really great move by Teladoc and just wise management in my opinion. Taking a look at the most recent quarter, some of these numbers are quickly getting quite attractive in my opinion. 45% revenue growth for the quarter to now $554 million. That's just quarterly, which is really impressive. 53% in adjusted EBITDA, pretty strong for this valuation. Year-over-year growth is even better at 86% year-over-year revenue growth to now just over $2 billion, and adjusted EBITDA more than doubled to $267 million. One of the key wins for this company is that it is now consistently cash flow positive, whereas in 2020 and most of 2021, it was burning cash. Significant improvement in the financials as its business scale. You can see year-end in December 2021, just shy of $194 million in cash flow from operations. It's not completely profitable yet, it's still making a net loss, but at least it's cash flow positive, which is a significant improvement in my opinion. At the bottom, adjusted gross margin of 68.4% for the quarter, really strong. They're just improving that from the quarter last year, only marginally, but when your gross margin that high, you kind of just maintain it. There's not much place for you to go in my opinion. Average revenue per user in US paid members increased at a strong rate, about 50%, and slight increase quarter over quarter. International users was a bit lower, but this is a predominantly US service. They need to increase this average revenue per user going forward. They need to get the users that they've got in spending more and more, just like a social media platform, because user growth is slowing. While I think those numbers are pretty impressive, guidance for the full year is not particularly impressive. They expect $255 billion to $265 billion in revenue. That's between 28 and 32% growth for the year roughly. So there is definitely some deceleration there. Reduction in net loss per share, but crucially, they will still expect to be loss-making going forward. Usage numbers will creep up only slightly. 54 to 56 million members in the US from 53.6 in the most recent quarter. That's essentially no growth as far as I'm concerned. 2 to 4%. They really need to be improving that, and that is quite worrying. And up to 20 million visits, which again is not pretty weak growth. These numbers were released before the Amazon news. Perhaps this is not factored in. Some clarity from management would actually be nice here, and is certainly to watch next time Teladoc reports. You can imagine that if this Alexa deal pans out really well, then usership will go up, visit only fee access will definitely go up, and revenue will go up. But again, only time will tell on that. It's not something you should be banking on right now, in my opinion. Looking at the balance sheet, I think it's fine here. We have around 1.2 billion in debt, 800 million in cash. Not concerning to me. Debt to equity is comfortable at 0.08. Our Altman score of 4.04 indicate that this is not a company in financial distress, and this balance sheet is conducive to future growth. It's not an amazing balance sheet, don't get me wrong, but this is okay for the time being. This is an acquisitive company, so don't be surprised if they take on a bit more debt in the future, or if they spend that cash, or use their equity. In my opinion, their equity is absolutely dirt cheap at the minute. Well, or if you were on the Teladoc board, you would hope you would consider this dirt cheap. So from that perspective, they would certainly be using cash or debt. Valuation metrics on the right-hand side are really the story here. Out of all of them, all that really matters is the price of sales. This is the only one that really makes sense, judging by those numbers. Price to sales ratio of just shy of 6. It's by far the lowest Teladoc has been for some time. Some of the lowest in its history on the public markets. Basically, when it was an unknown stock, it was trading at these valuations. In the middle of the pandemic, it was trading at over 30 times sales. It came right back down to earth now. Price sales ratio is sick. Compared to other companies, I was unimpressed with the guidance, and they're going to be growing at 30%. This is decent. It's still unprofitable, so I'm going to ding it a bit there because I'm not a fan that they're still not managing to be unprofitable. But price sales of 6 is starting to get quite cheap. You can see price to book ratio of 0.75 versus the wider industry. This is like unheard of, and versus Teladoc's history, this is about the lowest it's ever been. To summarise, first things first, the thought that this business is valued the same now as it was pre-pandemic is absolutely crazy to me. Clearly, the views of a lot of people have changed, and telemedicine is only going to be more and more important. Of course, the valuation has gotten really carried away at a certain point, but this is a company that has grew dramatically since the pandemic, over doubled, and has also acquired Livongo and Better Health, admittedly with some dilution. Now, I'm not a fan of the Livongo deal. It was very overpriced. As I said, it was 50% larger than Teladoc's current market cap. Well, most of that was equity. That is an L. There's no way of shaking that. Livongo has not been accretive to the balance sheet enough, and the chronic care offering is just not getting the growth that Teladoc will imagined. Better Health on the other side has done quite well, so I'm not completely lacking faith in management, but that Livongo deal really was quite shocking. Management are doing okay in my opinion. I think this Alexa deal has really swung me in the other direction. I was not impressed with them during the acquisitions, but this Amazon Alexa deal is not what I would have thought they would go for, but it's exactly what they should be going for, and I'm really impressed by management's attitude towards this. The guidance I'm pretty lukewarm on, but I think the valuation dictates this. I mean, six times sales for a company of this quality with 70% gross margin nearly, growing revenue at a decent rate, 30% year over year. 6 times sales is looking pretty cheap. It's at pre-pandemic levels. I mean, come on, that's very cheap in my opinion. I'm not buying in yet because I want to see what that Alexa deal does in the future, because I think it's going to be very important for Teladoc's future and telemedicine as a whole. I think there needs to be easier methods like using digital assistants to access these. But I think this could be a real steal at this current valuation. I think this is sure to be a larger than $12 billion company in 10 years. Perhaps a 5-bagger or something like that. Perhaps it can get back to its future heights. If you bought at the highs, I'm sorry, that's unfortunate. At nearly $300, it took a massive haircut, and I think it's going to be a while before it gets back to those valuations, because the market has changed and the opinion on Teladoc has definitely changed. That was the absolute peak of the valuation just after the Livongo deal. I wouldn't sell because I think this is a strong company that is going to get stronger, and the competition is not so large that there's not a slice of the pie left for Teladoc, and it does have 50 million users and several million visits. So I think Teladoc, there's definitely a place in the market for this company, and it will be bigger in many years. So I wouldn't necessarily sell the stock. If it was me, I would hold. I'm not buying right now because I want to see how they do in the next few quarters, because I think management has been a bit shaky. But of course, none of this is financial advice. If you want financial advice, you speak to a registered financial advisor. Please comment down below what you think about Teladoc. I'm really interested to hear on this, because I know there's a wide range of opinions on this topic, particularly from people who lost 74% on it. And like and subscribe if you want the channel to grow with me. Thanks, and I'll see you again.